Good afternoon. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday, the 15th of October, 2019, about 2:20 p.m. Central Daylight Time. Well, as you can see, down 4 to 6 cents in most of the grains. You know, we are entering that harvest period, and as much as we hear news, yields aren't right, acreage, blah, blah, cold weather, you still got to remember this is when supply comes to the market. Now, the interesting part of the day had to do with China today and talk about what they want in order to get to a 2-year ramp up, and that's what I've discovered, of a $40 to $50 billion annual purchase. And what they want is the tariffs to go away. Now, going away is a big term. Can the president take them off temporarily? He certainly could if he decided to. Will he? I don't think so. And the reason I don't think so is, as he says, he's getting money every day. Where's the leverage to get beyond phase one if he does that for phases 2 and 3? The tariffs would be gone at that point. So do I think that will happen? I'll go on record. I don't. It would be, in my opinion, unless he had a real clever way around it, not keep the pressure, not keep the pedal to the metal. It's the way to look at it. In the stock market, an interesting day because it does impact everything, and it's the beginning of the earnings season, and we got a lot of financials out today, a lot of the banks, and most reported better than expected earnings. The industrials are yet to come. It's only day one, so let's see where that goes. As for the dollar, down a little bit, and notice the big pop in the British pound because magically, I always laugh when I say that, it appears that at the very final hour, remember, tonight is when something is due that the EU can discuss in a 2-day meeting, which is taking place now. They think they have reached a draft that might be passed. Lo and behold. Let's take a look at soybeans. For the week, the market's down 2 cents, but the bias is still clearly to the upside. And remember, we have that potential of a lot of purchases, and I understand even today over 100,000 metric tons were earmarked for China. So there's purchases going on of that product. As you can see, we're getting a bit of a stall, which should not be a surprise. We've come straight up here from this 880 level all the way to 945 to get a little pullback wouldn't surprise me. And remember, we had a breakout period, and I'll show you that on the next chart, that came in right here in this 906 zone at first, and then the market, once it lifted, it just kept going. Fine. Pullback could easily happen. Where's the support? All the way back here at the 910.5 zone, which is the combination of the 18-day average and this gray line, the 200-day moving average of closes. That's pretty stiff support. And the last break low, lo and behold, 910.5. So everything's sort of fitting in there. Now, this 18-day average is going to cross over tonight. When the markets reopen, I'd be willing to bet, just because I know how the math works, you're going to lose one of these days back here, the 18, and mathematics is going to kick that average higher. Look at where the market has been running. It's been running on the upper Bollinger Band, and if you add to it momentum, you've had an embedded reading. When you have an embedded reading, it means that the slow stochastic, which normally bounces between 20 and 80, the traditionalists say, switches gears and decides to go sideways over 80. When that happens, I use the word embedded, locked in. That's the way that I describe it. And until it's lost, it means that on pullbacks on the market, you should be seeing support. The second thing is the market has a propensity to try to make higher highs while that's going on. Both elements are happening. When we look at meal, it's nothing like that. First off, in the meal market, you're overbought. The market's correcting a bit to the downside. I'm always bothered if meal doesn't lead the market to the upside in the soy complex. I realize oil can do it, and I realize oil can be in short supply. But the norm is if you're having an uptrend, meal leads it up, and if the market starts a correction, the oil-meal variable switches on you, and that's what's happening. This market started to slip as the oil market soared to the upside today, and in fact closed just under the upper Bollinger Band, got through it today. But as you know, when the first challenge of it, I often say, in fact, I don't recall me not saying it, is it's typically where the pros take some money off the table. Now, it can also be a report day, other things, so there's variables in there. But on a normal trading day, I would expect that to be the case, and you're overbought. So the trend is up. Overbought condition hit an upside. In the meal market, you're losing the upside momentum, starting to drift down. If the market were to take out 307.50, you could put into play that the resistance becomes the 100-day, and that's the support. Right now, this 100-day is a key number. You're just whipping back and forth. And if you look back to the beginning of October, it's been a pretty good number that the market's been playing around. In the corn market, yesterday you made your challenge of the upper Bollinger Band. Today a correction. Overbought condition. The market could easily pull back to the 18-day average. Doesn't have to, because it's not trending either. You've got a lower low and a higher high. We certainly see that the bias, once the market back in early September got over the 18-day average, it really has not bothered to try to settle under it. Made one attack of it, but didn't settle under it that day either. In the wheat market is first overbought. Second, I often look at this 100-day average in the upper Bollinger Band combination as a resistance zone. Can market go through resistance, go through support levels? Of course it can. But does it stay there is the bigger question. Overbought, has hit upside targets. I'm concerned the market might want to react a bit. Now, the sugar market went contra-seasonal as far as I'm concerned today. The market put on higher lows, higher highs. Until today's low, and that number was 1235 is taken out, you're putting into play, again, just hanging around that 18-day average, throwing out signals that don't go one way or the other. If I'm wrong and the market lifts up, well, then this area between the green line, 1285 to 1296 is the resistance. If you take out today's lows, you capture another group of people that are looking for a trend, and maybe you slip to that lower Bollinger Band. This chart, to me, problematic, but if you throw the name off it, higher lows, higher high, bull trend until this number is taken out, and an objective up there. That's the way to consider the chart. In the coffee market, I don't see a pattern that's tradable. I don't know if that's the real swing line higher. This is the high, because you had an outside day, and if we come here, you see what happened. You had an outside day up. If you take the low of an outside day out, I look to see where the main moving averages are. In this case, the two of them are above the market, so that means the Bollinger Band gets into play. Market went to it. But I don't know what this did. I don't know where the swing line is from there. So now you're getting bounces, but not certain what to do with that chart pattern. Not as though I'm always certain anyway. Certain doesn't mean I'm right. In the cocoa market, this market reestablished an uptrend today. Higher lows, higher highs. Now, one of the elements that the cocoa is trying to deal with has been the farmers in Africa that are growing have formed an association. And in that association, they want to get a certain minimum for their product. Hedgers don't know what to do with that at their commercial end. So what they had been doing is taking cocoa out of the ICE, International Continental Exchange warehouse. Maybe they're getting to the point where the numbers are getting lower. Don't know enough about it. I know that you got to the upper Bollinger Band today. You finished 25.22, so that number was 25.30. Got over it and you fell back, but the trend is up until you take out yesterday's low. In the cotton market, that big spurt up yesterday met today with, first of all, it was pretty much of a failure yesterday by the end of the day, and you're following through. You could be headed right into this 18-day average to figure out what next. Cotton did make it onto the list that China released today of possible products. There's meats, there's this distilled grain, there's grains of all type that they're looking at, lumber, machinery goods. They just keep expanding the list out because getting to a $40 to $50 billion a year deal can't happen in 1 year. They're already talking 2 years. They're talking remove the tariffs. I think that this deal that the president said and as he proposed, it's not done. It's a pause, and getting it on the paper and getting an agreement, that won't be an easy task. I'm not saying it can't be done. In the cattle market, as long as you keep this embedded reading, as long as you keep the pattern with higher lows, higher highs, why not the market moving higher? Today it finished unchanged. It tried the break, couldn't get anything going. You had a bullish crossover the past few days right through here, as you can see, and this market's got a lot going for it to the upside. Same in the feeder cattle. Even though it was down a little bit today, it's fighting at the upper Bollinger Band, and it's got the embedded reading. So on pullbacks, I'm still looking for support unless that embedded reading is lost. Last in the hog market, here's another one of these ugly trade days. Now, what do I mean by that? Look at yesterday. You got the highest high you've recently made, other than back here, so after a week or so, and then you have an outside day down. If you take out the high of an outside day down within 2 trading sessions, this is my rule. Then I'm looking for the market as it advances to go to the nearest key moving average, and the word is advances, so I don't have one up there, or the Bollinger Band. It's the Bollinger Band that I have in place there. So in looking at the markets, I think we're getting thrown not wrenches, but pauses in this trade deal. What does it mean? The devil's in the detail, and we got a lot of details to work through. It's really pretty simple if you think about it. You know, one of the tools I use in markets like this, and I'm looking at it a lot during the day, is I'm trying to see when a market gets a good rally or a break, is it a breakout of the market, or is it getting itself into trouble according to what's called pivot points? Now, pivot points look at a previous day's range, and it develops typically, in the traditional way of looking at it, 5 points. It'll get what we call resistance level 1 and 2. Then you get the pivot points, support 1, support 2. Some currency traders go out as many as 3 to 5 support and resistance points. It all depends what you're looking at. But the concept is, when you look at it, if the market's up at a resistance level 1, many traders are looking to go short against that, trying to get out at the 18-day average, and you flip it if you're down. Now, what I do different than many is, as an intraday tool, I'm always looking to see in sync, where is my stochastic study? Whether stochastics are on a 5-minute chart, 15, a 1-day, doesn't matter to me. In that time frame, I'm looking for the stochastics to be in sync. And when they get up to a level and they start turning down, I'm looking to see are prices rolling with it, or if they're staying strong, is the market possibly saying it wants to go to another resistance or support point. I explained this in a 3-video series. It's totally free to you. And in that series, I explain the concept of it, how I think it works, how to plot it on your charts, the colors I use, all the information. Simply go to our website. Under free offers, you'll see it there. Click up here. If you're watching me on YouTube, it'll take you there as well. And of course, you can do it the old-fashioned way and call my staff. They'll be happy to talk to you. I'm Ira Epstein. You have a good day.